For what feels like forever, the global economic orchestra has pretty much played just one dominant tune, American tech. But it looks like in 2026, the music is finally changing. A really dramatic new chord has been struck, and it's signaling a huge synchronized shift that's reshaping the entire investment landscape. Okay, let's dive into what's going on here.
So the investment firm Rebecca uses this absolutely brilliant musical metaphor to describe what's happening. They call it the Neapolitan chord. Now, if you're not a music theory nerd, it's basically this strikingly odd, almost off-key harmony that composers like Mozart and Bach would use to just grab your attention, right before a big shift in the music. And for the global economy, 2026 is that Neapolitan chord. It's this pivotal, surprising moment, right before everything resolves into a brand new, and honestly, a much more complex harmony.
But before we can really, appreciate the new symphony, we've got to revisit the powerful, familiar melody that has dominated the charts for years. That seemingly unstoppable march of the US tech giants. And wow, what a dominance it was. I mean, at their peak, the so-called Magnificent Seven, those mega-cap tech stocks, they accounted for a massive 30% of the S&P 500's total market value. Let that sink in for a second. Just 7 companies, making up nearly a third of the entire US market index. That's just wild. But here's the thing, right? That kind of concentration, it creates a huge vulnerability. And lately, we've started to see the first real cracks appear. The titans of tech have stumbled, entering what the market calls a technical correction, which is just a fancy way of saying they've dropped more than 10% from their recent highs. So why the sudden change of heart? Well, this quote really nails it. Investors are starting to feel something people are calling AI fatigue. You see, these companies are pouring hundreds of billions into AI infrastructure, and the market is now asking some tough questions, like, when are we actually going to see a real return on all that spending, especially when the stock prices are already so incredibly high? And all of this growing uncertainty is basically the catalyst for a really profound shift. That vast river of money that once flowed almost exclusively into US tech is now changing course. It's searching for new, more fertile ground. This right here, this is the turning point of our story, the beginning of the Great Rotation. So, what exactly is this Great Rotation? Well, it's a theory that describes how these huge pools of investment money move, or rotate, from one part of the market to another. It could be from one industry to another, or like in this case, from one geographic region to another. And it all tends to follow a kind of predictable cycle. And the data shows this is no longer just a theory. I mean, look at this. In January of 2026 alone, a record-breaking $51.6 billion flowed into international stock funds. This isn't a trickle. It's an absolute flood of capital moving overseas, looking for brand new opportunities. So the big question is, where is all this money going? Well, a really big chunk of it is finding its way to the new contenders on the world stage, with the resurgent economies of Europe popping up as a prime destination. And a huge part of Europe's appeal right now just comes down to simple math. It's all about value. We're looking at something called the price to earnings, or PE ratio, and all that really tells you is how much you're paying for $1 of a company's earnings. So right now, US stocks are trading at 22 times their expected earnings, but European stocks, they're at a huge discount at only 15 times earnings. For investors, that looks like a pretty sweet bargain. But listen, it is not just about being cheaper. There are some really powerful economic engines firing up all across Europe. We're talking huge government spending on things like defense and infrastructure, banks that are finally healthy enough to start lending again, and Germany, the continent's economic powerhouse, is finally shifting away from austerity and toward pro-growth policies. Plus, exports are picking up again. This quote from Fidelity portfolio manager Faris Rahman just captures the moment perfectly. This is a fundamental mindset shift. Moving from a mindset of cutting back to one of investing and growing, well, that could unlock a tremendous amount of economic potential across the entire continent. But this rotation is about more than just finding cheaper markets. It's also about this bigger realization that the most powerful economic stories of our time, yeah, I'm talking about the rise of AI, were never just an American thing to begin with. Think about the AI boom like it's a gold rush. While everyone is focused on the miners, the big US tech companies, the real, lasting fortunes are often made by the companies selling the picks and shovels. And in the AI gold rush, those essential tool makers, they're located all over the world.
This slide just shows how global that whole pick and shovel operation is. I mean, just follow the journey of one single high-end AI chip. Sure, the design might come from a US company like NVIDIA, but then that design gets sent to Taiwan to be made by TSMC. And the unbelievably complex equipment they use for that, that comes from ASML over in the Netherlands. Then the chips are tested with equipment from Advantest in Japan, and they need memory chips from SK Hynix in South Korea. You see, AI is a truly global team sport. So, when you put all these powerful movements together, the rotation of capital out of the US, Europe's economic comeback, and the truly global nature of innovation, a new picture of the world economy for 2026 starts to emerge. And it's a picture of a new, way more complex harmony.
And we've come full circle. That dramatic off-key Neapolitan chord is finally resolving. The dissonance of US-only dominance is giving way to a period where multiple economies are all finding their rhythm and starting to grow together in a synchronized upswing.
Now, Rebecca lays out 3 possible ways this new music could play out. Their base case, the most likely scenario, is this synchronized shift. But of course, there are risks. A bear case could see stagflation. That's that nasty mix of slow growth and high inflation, maybe if the AI bubble bursts. On the flip side, a bull case could see US dominance come roaring back. But the main forecast, the one they're betting on, is for a shared global recovery. So the driving force behind this base case is the idea that multiple engines are all firing at once. We've got easing trade tensions, which really helps, and the global manufacturing cycle is picking up steam. This isn't about one country winning at another's expense. It's about the global economic tide rising and lifting a whole lot of boats with it. And at the end of the day, what does all this mean for how we should think about the world? Fidelity's Jed Weiss puts it best with this fantastic analogy. He says, focusing only on US stocks right now is like deciding to invest only in the eastern half of the country. You might do okay, but you're ignoring a massive world of opportunities right next door. The story of US exceptionalism was a powerful one for sure, but the global economy is clearly composing a brand new masterpiece with way more instruments and a richer, more complex harmony. The only question left is, are you listening?